today. I just want to listen to Powell talk. That's all I want. I just want to listen to Powell talk. That's all it is. That's all it is. I just want to listen to Powell talk a little bit. All right, guys. Again, smack that like button on the way in. We're getting fucked with a little bit today. It's fine. It'll be fine. I think we're good. I literally rebooted it twice. So hopefully we're good. Is Moto in the community? Yes, he is. Don't worry. Moto's my guy. All right, guys. Smack that like button on the way back in. I think I have the link up. All good now? Well, we'll see. Give it a few minutes. We'll fucking see how this thing wants to end up turning up. But again, Spy just kind of chopping around at this 5-minute 200, selling off a little bit now, going into the final minutes, leading up into the Jackson Hole Symposium here. We have volume. Yeah, guys, you were yelling at me. You were like, read the chat. The chat wasn't coming in. It was not. I couldn't see it. I read the chat all the time. I could not see it. All right, team. Keep smacking that like on the way in. Let's get everybody back in here. Let's have a nice little watch party with Powell coming in a minute. Then we're going to have issues trying to get the audio with Powell. Watch. I got to click those like few buttons and see all that bullshit. A Moto live stream would be very interesting. Yeah. If you combine both likes, it equals 500. No, it doesn't. Hey, SV, yesterday I had a SPY put. They were able to sell 3 minutes after close. Never seen that happen before. Yeah, you can trade SPY and SPX and a couple of the other ETFs until 15 minutes after market close. 4:15. 4:15 they close. All right, man. We got 7 minutes to go until Jackson Hole with Powell. That's going to be fun. I got the live stream link over here with the Wall Street Journal. Oh, that's scheduled to come on at 10 a.m. So let's see. They're probably going to say some bullshit over there and then we'll be good. I can hear my computer getting bullshitty again. Quiet. I don't want to have any of that none of that shit, computer. Got your double like as usual. Thank you guys. Port up 1.66%. You're on a roll. You guys are wild for trading pre-Powell. Like insane. I don't know. I'm not doing anything. I'm doing a whole lot of nothing. Whole lot of nothing. Change the oil? I should. Jesus, Moto. Is it too early for that shit? Frank was saying look at Google. Google was turning up here a little bit. How's it look on the daily? It's still probably yeah, no. Google. You had it here for a second, and then it just lost all of it. Yeah, Gabe was having problems with his stuff, too. I don't know. Just probably one of those days. One of those days, man. How my eyes? My eyes are fine. My left eye was fucked up yesterday, and now I'm chilling. Now I'm chilling. Jesus, you guys are already almost back at 100 likes? What the fuck did I do to deserve that? Thank you, team. Conspiracy. Nah, it's just bullshit. Connectivity issues. Probably RAM or some nonsense. You know? Let's see. All right, we're about to get consumer sentiment in here as well, I believe. Consumer sentiment or confidence. Sentiment, yeah. So there's the candle for consumer sentiment. Let's see what happens. I'm just on the 5-minute here. Not doing anything yet. Helping us print. You get the like. Thank you, man. Low asset incoming. Oh boy. Oh boy. Yeah, we got 5 minutes to go. That yeah, so the Wall Street Journal should have that Jackson Hole Symposium stuff. So in 5 minutes, we're going to keep looking at that a little bit more. Get the audio going, listen to what Powell has to say. I'll break it down a little bit, and then we'll be good to go. Michigan consumer expectations, August actual 65.5 versus 68.3 previous, estimated 67.3. Interesting. Lower than expectations. Let's see. Dude, we're almost back at 200 viewers, 100 likes. There you go. There we go. Yeah, look at this. Do you really want to trade this? Fuck, I don't. I don't want to trade any of this right now. I want to hear what Powell has to say. That's what I want to hear. Am I playing Tesla today? Not before Powell. Not before Powell, guys. I'm waiting. I'm waiting. If I see anything later in the day, sure, but I'm not touching much this morning. To me, it doesn't make much sense to subject yourself to that type of risk. As a trader, you have to know knowing when not to trade is probably more important than when to trade. Tesla did go on a nice little run at open. If you hit it, congratulations. That's awesome. To me, that doesn't necessarily follow the plan and rules that I have set up for myself, so I don't touch it. And that's perfectly fine. Don't do that again, please. It was me in my computer glitching out is not in my control. Slow down the likes. He's gonna cut this stream now. No, I'm not gonna. We got 4 minutes to go. We're 5 likes away from 100. Thank you guys. Appreciate it. I think we're good here. Cool. Now it's just a waiting game for what Papa has to say. What is Papa gonna tell us? This chop sucks. NQ has basically stayed the same as where I left it. Exactly. Well, so why trade it? Look at this on the 5 minutes. Just fucking wicking around. I don't care about this. I want a nice clean move. Are you going to get that with Powell? Probably not. So I don't trade it. More of a gambler. Me? Hell no. Follows the rule. We got to follow the rules. Chopping around here, doing really nothing. Really a whole lot of nothing. There's a big sell candle out of nowhere. Nice. Great. I bet everybody just got baited into this move up and then just got rug pulled. Stop out. There you go. That's what you get for trying to play 3 minutes before Powell speaks. That's what you get. Oh, look, right back up. Like, what did we say in pre-market, guys? Let them do their thing. Look, they stopped everybody out and took it up. Everybody. You that's stop out city right there. You're not like, this is stupid. I understand. Like, I want to give you guys that, like, the trading content that we always do, but some days, like today, is just no. It's just a hard no. I'm not touching anything. I gotta make money too, team. You want to be bearish, but it'll go up $3 if you buy a put. That's why you need all of the tools that we provide on trade1348.com. That doesn't happen. Like, it just doesn't. Like, if you're holding for a $3 move against you, you literally followed 0 of the rules that we teach every single day. So again, everybody gets their first month free. Make sure you guys are hopping in on that. And remember, all of you masterclass people, or the people that want masterclass, time's running out, like we were saying in the first stream of the day. Be careful. Do not miss that, man. It's you guys have gotten your warnings. He's on right now. Yeah. All right.
Of monetary policy, which would slow the growth of aggregate demand, allowing supply time to catch up. While these two forces are now working together to bring down inflation, the process still has a long way to go, even with the more favorable recent readings. On a 12-month basis, U.S. total or headline PCE inflation peaked at 7% in June 2022 and declined to 3.3% as of July, following a trajectory roughly in line with global trends. The effects of Russia's war against Ukraine have been a primary driver of the changes in headline inflation around the world since early 2022. Headline inflation is what households and businesses experience most directly, so this decline is very good news. But food and energy prices are influenced by global factors that remain volatile and can provide a misleading signal of where inflation is headed. And in my remaining comments, I will focus on core PCE inflation, which omits the food and energy components. On a 12-month basis, core PCE inflation peaked at 5.4% in February 2022 and declined gradually to 4.3% in July. The lower monthly readings for core inflation in June and July were welcome, but 2 months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal. We can't yet know the extent to which these lower readings will continue, or where underlying inflation will settle over coming quarters. 12-month core inflation is still elevated, and there is substantial further ground to cover to get back to price stability. To understand the factors that will likely drive further progress, it is useful to separately examine the three broad components of core PCE inflation: inflation for goods, for housing services, and for all other services, sometimes referred to as non-housing services. Core goods inflation has fallen sharply, particularly for durable goods, as both tighter monetary policy and the slow unwinding of supply and demand dislocations are bringing it down. The motor vehicle sector provides a good illustration. Earlier in the pandemic, demand for vehicles rose sharply, supported by low interest rates, fiscal transfers, curtailed spending on in-person services, and shifts in preference away from using public transportation and from living in cities. But because of a shortage of semiconductors, vehicle supply actually fell. Vehicle prices spiked, and a large pool of pent-up demand emerged. As the pandemic and its effects have waned, production and inventories have grown and supply has improved. At the same time, higher interest rates have weighed on demand. Interest rates on auto loans have nearly doubled since early last year, and customers report feeling the effect of higher rates on affordability. On net, motor vehicle inflation has declined sharply because of the combined effects of these supply and demand factors. Similar dynamics are playing out for core goods inflation overall. As they do, the effects of monetary restraint should show through more fully over time. Core goods prices fell the last 2 months, but on a 12-month basis, core goods inflation remains well above its pre-pandemic level. Sustained progress is needed, and restrictive monetary policy is called for to achieve that progress. In the highly interest-sensitive housing sector, the effects of monetary policy became apparent soon after liftoff. Mortgage rates doubled over the course of 2022, causing housing starts and sales to fall and house price growth to plummet. Growth in market rents soon peaked and then steadily declined. Measured housing services inflation lagged these changes, as is typical, but has recently begun to fall. This inflation metric reflects rents paid by all tenants, as well as estimates of the equivalent rents that could be earned from homes that are owner-occupied. Because leases turn over slowly, it takes time for a decline in market rent growth to work its way into the overall inflation measure. The market rent slowdown has only recently begun to show through to that measure. The slowing growth in rents for new leases over roughly the past year can be thought of as in the pipeline and will affect measured housing services inflation over the coming year. Going forward, if market rent growth settles near pre-pandemic levels, housing services inflation should decline toward its pre-pandemic level as well. And we will continue to watch the market rent data closely for a signal of the upside and downside risks to housing services inflation. The final category, non-housing services, accounts for over half of the core PCE index and includes a broad range of services, such as healthcare, food services, transportation, and accommodations. 12-month inflation in this sector has moved sideways since liftoff. Inflation measured over the past 3 and 6 months has declined, however, which is encouraging. Part of the reason for the modest decline of non-housing services inflation so far is that many of these services were less affected by global supply chain bottlenecks and are generally thought to be less interest sensitive than other sectors, such as housing or durable goods. Production of these services is also relatively labor intensive, and the labor market remains tight. Given the size of this sector, some further progress here will be essential in restoring price stability. Over time, restrictive monetary policy will help bring aggregate supply and demand back into better balance, reducing inflationary pressures in this key sector. Turning then to the outlook, although further unwinding of pandemic-related distortions should continue to put some downward pressure on inflation, restrictive monetary policy will likely play an increasingly important role. getting inflation sustainably back down to 2% is expected to require a period of below-trend economic growth, as well as some softening in labor market conditions. Restrictive monetary policy has tightened financial conditions, supporting the expectation of below-trend growth. Since last year's symposium, the 2-year real yield is up about 250 basis points, and longer-term real yields are higher as well by nearly 150 basis points. Beyond changes in interest rates, bank lending standards have tightened and loan growth has slowed sharply. Such a tightening of broad financial conditions typically contributes to a slowing in the growth of economic activity, and there is evidence of that in this cycle as well. For example, growth in industrial production has slowed, and the amount spent on residential investment has declined in each of the past 5 quarters. But we are attentive to signs that the economy may not be cooling as expected. So far this year, GDP growth has come in above expectations and above its longer run trend. And recent readings on consumer spending have been especially robust. In addition, after decelerating sharply over the past 18 months, the housing sector is showing signs of picking back up. Additional evidence of persistently above trend growth could put further progress on inflation at risk and could warrant further tightening of monetary policy. The rebalancing of the labor market has continued over the past year, but remains incomplete. Labor supply has improved, driven by stronger participation among workers aged 25 to 54, and by an increase in immigration back toward pre-pandemic levels. Indeed, the labor force participation rate of women in their prime working years reached an all-time high in June. Demand for labor has moderated as well. Job openings remain high, but are trending lower. Payroll job growth has slowed significantly. Total hours worked has been flat over the past 6 months, and the average work week has declined to the lower end of its pre-pandemic range, reflecting a gradual normalization in labor market conditions. This rebalancing has eased wage pressures. Wage growth across a range of measures continues to slow, albeit gradually. While nominal wage growth must ultimately slow to a rate that is consistent with 2% inflation, what matters for households is real wage growth. Even as nominal wage growth has slowed, real wage growth has been increasing as inflation has fallen. We expect this labor market rebalancing to continue. Evidence that the tightness in the labor market is no longer easing could also call for a monetary policy response. Turning to the path forward. 2% is and will remain our inflation target. We are committed to achieving and sustaining a stance of monetary policy that is sufficiently restrictive to bring inflation down to that level over time. It is challenging, of course, to know in real time when such a stance has been achieved. There are some challenges that are common to all tightening cycles. For example, real interest rates are now positive and well above mainstream estimates of the neutral policy rate. We see the current stance of policy as restrictive, putting downward pressure on economic activity, hiring, and inflation. But we cannot identify with certainty the neutral rate of interest, and thus there is always uncertainty about the precise level of monetary policy restraint. That assessment is further complicated by uncertainty about the duration of the lags with which monetary tightening affects economic activity and especially inflation. Since the symposium a year ago, the committee has raised the policy rate by 300 basis points, including 100 basis points over the past 7 months. And we have substantially reduced the size of our securities holdings. The wide range of estimates of these lags suggests that there may be significant further drag in the pipeline. Beyond these traditional sources of policy uncertainty, the supply and demand dislocations unique to this cycle raise further complications through their effects on inflation and labor market dynamics. For example, so far, job openings have declined substantially without increasing unemployment, a highly welcome but historically unusual result that appears to reflect large excess demand for labor. In addition, there is evidence that inflation has become more responsive to labor market tightness than was the case in recent decades. These changing dynamics may or may not persist, and this uncertainty underscores the need for agile policymaking. These uncertainties, both old and new, complicate our task of balancing the risk of tightening monetary policy too much against the risk of tightening too little. Doing too little could allow above target inflation to become entrenched and ultimately require monetary policy to wring more persistent inflation from the economy at a high cost to employment. Doing too much could also do unnecessary harm to the economy. As is often the case, we are navigating by the stars under cloudy skies. In such circumstances, risk management considerations are critical. At upcoming meetings, we will assess our progress based on the totality of the data and the evolving outlook and risks. Based on this assessment, we will proceed carefully as we decide whether to tighten further or instead to hold the policy rate constant and await further data. Restoring price stability is essential to achieving both sides of our dual mandate. We will need price stability to achieve a sustained period of strong labor market conditions that benefit all. And we will keep at it until the job is done. Thank you.
One second, bro. Interesting here. Hold on. Let me get the audio back up real quick. Oh my Lord. What is going on here? Dude, it's doing it again. All right, we're good. All right, team. Very interesting price action over here. Look at all of this craziness happening. So everybody, again, make sure that you guys slap that like button on the way in. Helps out a whole lot getting these streams out to some more people over here. That's interesting, man. I mean, it was really a whole lot of nothing. He just kind of reiterated the statements that they have already made. So the interesting thing here, and I was thinking about this last night about the real estate market, and I don't think anybody's really talked about this yet. I think people are very surprised and shocked at what's happening with real estate in general right now. But I think there's a very, very easy explanation to this. If you're talking to like real estate agents or anybody that is in the market to either sell or buy a house right now, this is a little real estate sauce that I'll give you guys. What is everybody's expectation right now in terms of interest rates, the federal funds rate? The federal funds rate is what Powell moves around all the time. And when they move it up, well, it's going to correlate into mortgage rates as well. So everybody's expectation right now is that we're not going to stay at these levels forever, and we're probably going to come down in the near future. Okay, what does that mean for the housing market, though? Well, when rates go down, prices typically go up. Now, you're seeing this kind of, it's not an inverse, but it's a weird relationship between what home prices are actually doing right now and what they should be. When rates go up this much, you would expect to see lots of home prices come down. The problem is that you also have to realize that the housing market lags. So here's what the housing market actually needs in order to get to an actual like equilibrium level. It needs time. The reason why I say it needs time is because you need more transactions to go through. And you need expectations to shift. If the expectation right now is that rates are going to go down soon and you can probably get more for your house, well, then you're not going to sell it. Especially if you're an individual that bought a house in the last 3 years, you're not selling it. Even if you're going to get more money for it, it doesn't make sense to sell because when you go back into the market, well, then you're paying a 7-8% interest rate. So it doesn't make sense to actually transact in this market, especially with the overall assumption being that rates are going to come down and this market is going to stabilize. So what does it need? Well, it needs time because you need more transactions to take place. It could be 1 year, 2 years, 3 years. It doesn't matter. There's still going to be transactions taking place and they're going to still creep down a little bit. That's kind of what I'm looking at. It has to do with expectations. It's like, well, if you think about it, like it does make sense that home prices have stayed the same because if you have all these people that have more money from the sale of their recent homes that can then might be able to afford these homes at these higher interest rates, they're going to transact in the market, but eventually you're going to get to the point where those people are then out of it. And then that's where the time kicks in, where you start to see more people coming into the market. So SPY's fucking around here. I'm still not very interested in what this market's doing right now. Everyone's hoping they come down. Exactly. Meet Kevin. What about me, Kevin? You made some money on the run scalping it? Yeah, I didn't want to touch any of this, man. I don't. I've taken 0 trades today. I don't think it's really worth doing anything right here. You have 0 trend. There's no trend in this market right now. You got chop, 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 down, up, down. Like, I'm not touching this until probably later in the day today. But it's also a Friday, so I may not do a whole lot with this thing. Maybe I'll try to get a couple of quick scalps here and there. Premiums are going to come down a little bit over the next probably hour and a half, 2 hours. They're going to kind of settle in there after these remarks from Powell, and then we'll see what we can get from there. Other than that, though, what do we got? Nvidia went on a nice little run a little bit up here to that 5-minute 200 EMA and then rejected. AMD, kind of the same deal here, got up a little bit higher, but is now back down below. Tesla broke those highs, is holding up a little bit better than the overall market. Tesla has kind of set this trend to the upside here. Google, interesting one here. I thought this thing was up for a second, and then, yeah, Google was up nicely for a minute there, 131.45, and then sharked. So really, this is just kind of one of those days where I want to see where this market actually wants to trend and then identify off of that. Those of you guys that were in master with us, like 2 days ago, there's no trend yet. So I want to wait for that trend and really identify where I can get those good risk reward setups, because to me, there's really not much here. You caught it at the top. Nice, Mono. Like, again, part of me wanted to buy calls down in here. Like, I wanted to do it. I thought the market was going to come up. But the discipline that I have as a trader and the plan that I had going into today was don't do anything. So I have to follow that. I have to say, okay, my plan going into today is don't do anything until Powell speaks and you see the dust settle and can identify the trend. All right. I don't really care what happens during the market. I can see something really interesting that I want to kind of take a little bit of a risk on. No, didn't do it. Even though I was right. It doesn't matter. The outcome of the trade guide doesn't necessarily matter. It more matters if you follow your plan or not, because your plan is set up to give you long-term success. Does that make sense? Also, team, we are about 25 likes away from 150. I appreciate you. Thank you guys for coming back in, liking the video again. Let's see what we get here. We can maybe throw this on the 3-minute now, kind of see if we can identify a trend coming in a little later. We're just hanging on to this 3-minute 200 EMA currently. The trend is sideways. Yeah, I mean, sort of. You got the Powell volatility, and now it's going to settle down. I want to wait for these premiums to settle in here and then maybe potentially do something. Over 300 ankles? No. It has to be on one stream. Over 500, you get ankles. Moto. No. You should put on a dominatrix costume and show us some discipline. How about no? How about I'm not going to do that, actually? That's not what I want to do with my Friday, actually. That's like actually 0% of what I want to do with my Friday. Let's see here. Selling, coming down to these lows here. What is this at? It's like what? What is this? 437.72. Dude, we flew all the way up to what? 441. And this is why, guys, this type of movement, this drop from 439 to 437 all the way up to 441.20 here is why those premiums were so inflated this morning, because this is what the market was expecting to happen. If you're expecting giant moves in here, then the premiums, meaning the prices of options, are going to reflect that. If we saw this type of movement on a normal day, those options would have been up like 500 to 1,000%. Getting yellow in the 3. Make sure you have real-time data. You're paying for all the data subscriptions that you need on TradingView. You should have jumped into the Apex Challenge this week instead of waiting for the deal. You ended the week 1,047 over the necessary profit goal to pass, thanks to 1348. Fuck yeah, Kenny. There you go. Yeah, I mean, you can do it anytime you want, man. There's no rush. There's really no rush. I saw your message in Market Talk yesterday. I think that's awesome. I think prop firms are going to benefit someone like you greatly. You are a great trader. You just are undercapitalized. You just don't have the capital to trade with, which is fine. And that's where those prop firms come in, and you can utilize them to generate more income from the skills that you have. Let's see. Oh, Dude, I went to the gym yesterday with my buddy. He's been going to he's a pretty strong kid. It was chest day, and he starts throwing up some weight, and I was like, you know what? Fuck this. I'm going for it too. Like I like my all time max bench is 285. So I was like, fuck it, we're gonna go. So I squeezed out 5 at 225, and I was like, all right, screw this. And he was like, all right, I'm going up to 245, and I was like, hey, fuck you, I'm doing it too. So I got like 1.5 on 245. I just haven't had time to go to the gym much, but I was proud of myself, bro. Getting back at it. So we came down to this low here, guys, and we bounced off of it. Let's see if the sellers want to take this thing a little bit lower and then potentially set a trend down. But we are going to see this increased volatility probably for the next 30 minutes. So it's going to whip around. To me, I'm probably not going to really start looking for trades until like 11:15 or later. SUV strong. I mean, I guess. My legs are weak as fuck. That's fine, though. It's not fine. It's no, that was a lie. It's not fine. All right, so we're breaking these lows here. Let's see if we can set that trend to the downside. If we can get a nice little entry along with this trend, it would look something like this. Again, still going to see increased volatility, so I'm not really looking for this yet. We have this trend down. See if we can get this little retest back up. Either get a 1 minute golden eye, maybe back down to these levels in here. Get a little something like this, come down to these lows, first take profit here. You got a little bit of risk to reward that could potentially look something like this. Stop above the high, take profit at the low, 1.7 to 1 risk to reward, bing, bang, boom. I don't know if we're going to see that. That's just if we end up setting this trend down. Again, guys, if then statements. If this is a trend down and it wants to follow this trend, then I would look for an entry that looks something like this. That's what that's about. It's not, oh, I'm going to be taking this, especially within the next 30 minutes. I'm going to let this thing settle in. 285 is not light. Yeah, I did that in, I think it was college. I think I was a sophomore in college. I wanted 3 plates, dude. I was so fucking close. Now up 50.3% of the port for the day and definitely walking away out of settled cash. Holy shit, winning loser. There you go. There you go. Aren't pro traders the ones who don't use many indicators? All price action? No. That's what people on like Twitter and shit like to tell you. They're like, oh, you got indicators on your chart? You don't know how to trade. It's like, no. You know who uses indicators? Gabe. Do you know how much money Gabe makes in the market? Way more than everybody on Twitter. So like that's what people like to say to be like, ew, I'm so much better. It's like an elitist mindset. It's like, you're gonna fucking, okay, cool, good luck. 8% on the port, I'm out. There you go. 64% on that SPY drop and out. Happy fuck around and find out Friday. There you go, man. Yeah, I mean, there's still going to be the ECB's Lagarde, I believe, is going to be speaking later today. So that's going to be interesting. I think that's going to be like what, around 1 or 2 p.m. So I gave simplified his chart. That's just for futures. That's just because he's trying to tweak his future strategy. He's just worried about fees. I was like, dude, the fees don't matter. Still making money. Up 18.09% on the port so far, waiting now for the reversal or a clear trend to re-enter. Yeah, that's what I'm looking for, man. It's just we tweak a lot of stuff all the time. We're like, okay, what about this? What about this? All right. Dude, you guys are crushing it. Again, every single one of you guys that isn't in there with us yet, everybody gets their first month completely free to trade1348.com. The QR code is on the screen. Jesus, you guys are ripping it today. QR code's on the screen, team. I'll throw that link in the live chat for you. Remember, you don't have very much time left to upgrade to master either before the new pricing structure shift. Be careful. You definitely do not want to miss this one. All right, let's throw this on the 1 minute. You're getting 1 minute golden eye here. Let's see if we can identify a level of respect. Let's see. No, this is just doing what it wants to do here. It's got a mind of its own currently. Love the stop loss strategy. Probably my most powerful VIX lesson. Thank you, Jack said. I appreciate that, bud. Yes, you do have these pre-market lows at 436.68 that we could come and hunt. I mean, we can delete this. You guys all know what we're looking for here. I don't want this to cloud the chart. And the movement here is going to be big too. So the risk is going to be a little bit larger on futures. Yeah, I'm just waiting. It's very possible that I take 0 trades today, which is fine. I don't really need to do anything. Today was a solid 6% port day as well for you. Did it all on battery power. There you go. Oh, whoa. Thanks to the storms we had last night. Where are you from, Spasso? What the fuck? Where are you? Is it Florida? We are trending down. I just want to see a level of respect somewhere. You removed most of your indicators and left GoldenEye in the MACD. All the other clutter was giving you analysis paralysis, but we all trade in our own way. Do what works for you individually. Exactly. Exactly. The Metro Detroit area, yeah, maybe we had some pretty severe storms. Oh, damn. Yeah, guys, if you really like GoldenEye along with something else, you guys are good to go. Yeah, Tabasco was around like a couple weeks ago. Well, let's see what happens here. All right, let's see what happens at this 437.72 level up here. How are premiums now? Let me take a look at like SPX, see what they're doing. Did they just deflate? Little bit. They deflated a little, but they're still jacked. Yeah, these premiums are still jacked up. I'm probably gonna get. Yeah, they are. I'm probably gonna give this like an hour or so still for these premiums to settle in. About to get the cross down on the 5-minute for SPY. Woo! There we go. Yeah, it's not really doing what I would need it to do in order to take some trades. Let's see. Who should we got? Yeah. Oh, also on YouTube, probably very soon after this stream ends, I'm gonna post a one of those live trade recaps for you guys, like a video recording of me live trading. So get ready for that. That's gonna be in a YouTube short. So I'll throw that one up probably like right after this stream. So get ready for that announcement. That'll be a good one. Yeah, he popped up on Twitter. People get busy, man. It's the summertime. People get busy. So it's trying to turn up here, do a little bit of a trend retest. Let's see what this looks like on the 3-minute. It's not holding up. Like I need it to hold up near that 13 in order to do it. I'd love it to come up and test this level and then drop. This 438.07's in it. Wait, where is that? This? Oh yeah, a 224 EMA there. I'd love that. No, it's just running up to that 13 and wicking it. Nothing for me yet. If this like drops hard, falls through like the pre-market lows, maybe I'd be open to taking a reversal trade later. But this is not giving me that trend continuation trade that I would like right now, so I'm staying away. BP? What's BP? Yeah, so I mean, you kind of got to hear off that 1 minute test, new low. It's just not for me yet. It's not for me. British Petroleum. Interesting. Maybe it's a different one. If it's a 3 minute alert, it's going to happen somewhere way different. Because guys, the 3 minute alert is not always going to come before the 5 minute. So if it's alerting the 3, it's alerting the 3. But a lot of the time it will come right before the 5 if it is shifting trend. US 2-year yield extends rise through 5. They're selling treasuries. Fed swaps price out first 25 basis point rate cut to July from June. That's not true. It was May. That's not true. We're at 5.525 to 550. When you go to May, oh, it did stay. Okay, so that shifted. That shifted from what we were looking at before. No, it's June still. It said to June from July. Maybe this is a little bit delayed here with what they're pricing in. That's interesting though. And see, this volatility is going to stay here. So I'm going to wait for this to settle down a little bit and then potentially try and get some quick scalps. But especially on this 1 minute time frame, it's very volatile. That probably just wicked there on the 3. Yep. You practice futures all week and only jump in on Webull for 1 or 2 quick trades at open. Port still went up 35.87 for the week. You love 1348. There you go, Kenny. Yeah, guys, again, for all you guys sitting on the sidelines here, everybody gets their first month free. I don't know what you're doing at this point. If you guys like to lose money in the market, keep doing what you're doing. But if you want to change and come into the winning team, you guys know where to find us. It's way late. That's interesting. Yeah, sometimes they skip bars, but that shouldn't be happening. Best of luck, everyone. Got to get some sleep now. Stay frosty, cohesive. You too, buddy. Trying to figure out how to trade futures. Ryan, have you watched the futures introduction video that the stream that I made for you guys and for masterclass? I know you're a master member. Go watch that one. I can make another one. Maybe we could talk a little bit more about futures in the next midweek master. We could do that too. On trade today? Yeah, I'll do a little I'll do a little. Okay, maybe we do that next week instead of time frames. We do a part 2 with futures. So you are 3-minute golden eyeing here, but again, look at these ranges. The risk here is way too much for my liking. Like if I were to pull this up on ES, that's probably like 4 or 5 points to the low here. Yeah, definitely 4 or 5 points to the low. There's no way I'm taking that. Way too much risk. I like to be within 3 points. 2.75 is the most risk I'm willing to take on a futures trade. What prop firms are good for futures? Top Step and Apex. One-on-one with futures and do a few paper trades. We could do that. We could do that. After SV's trend diagram and Gabe getting us back to the cross, 3 straight days over 1% pod. That's what we like to see, guys. Like, again, you guys are in the right place. There you guys go. And we're 4 likes away from 150. Thank you, team. On the second stream today when it was glitching out on us before. I appreciate that, everybody. Like, guys, I would love nothing more right now than to just go in the market, trade, make a bunch of money, and be done. But I just don't see anything that I like yet. So this could get interesting here on the 1 minute time frame. Where's the 24? So there's the 24. Let's see. All right. That's the 1 minute 24. You're sharking around here. Fed swaps price in additional rate hike premium for November. Really? Yeah, okay. So we now are a 49.8% probability of no rate hike here. Hold on, what's the December? Okay, so 49.4% probability that we have no more rate hikes, but this is creeping up a little bit. For one more additional rate hike this year. Yeah, bro, these premiums are fucking jacked. Like jacked. Like on SPX, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 strikes out of the money is still $280. Almost 290. That's like 2.8 times what they use. Like, these are way overpriced. You know what else creeps up? What else creeps up? Yeah, so be careful, guys. This is not like a day that I would be fucking around too much in personally. If you guys are doing it, to each their own. I never really like to buy overinflated premiums just because of how they're going to move. The risk to reward compresses, and I don't like that. All right, guys. All right. Nibbler, Jesus. It's too far, bro. All right, we broke that low. New lows on the SPY, 436.62. So again, we did get that trend move here, that sell-off retest down. The risk was going to be right around here. You could have risked it above here, played it to the low, and actually made some money. But I looked at it for a second, and I saw the premiums were just so inflated. I was like, I was going to try and pull up the futures account quick, and I was like, why bother? Just going to wait. Picked up in the money 9.5 puts. Price wasn't bad. There you go. 4 green days this week. Did not trade Thursday. GoldenEye is the truth. Thanks, 1348. Yeah, guys, GoldenEye is really epic. Like, really epic. You guys have seen, I mean, I've shown you guys some of the multi-100 percenters that I've hit with SPX with it. It's nasty. The trade recap that I'm going to post for you guys on YouTube in a little bit is it's a 40% trade. It's a good one. What do I use for futures? Tradeovate in Ninja Trader. My partner's like, hey, we going to work today? Me? No. Yeah, I'm not touching it. AMD almost had 100. No. AMD, no. That's no fun. SPY selling here. Oof. Look at that. That 1348 cross on the 5-minute there. Oh my Lord. I bet Gabe is fucking having a good time here. Jesus, dude. Jesus. Let's see. Selling hard here. RSI on the 5 minutes about to be overcooked. Very close. It's at 32.40, 32.50 here, 32.30. Let's see. You took some trades, but I priced in the risk with the super small positions. Still made 3% on the port. Even in volatile markets, trading small, you can make good money. 100%. It's distracting from your bad trading. Ryan, what? We're not doing anything right now. There's nothing to do for me. I'm not doing anything. I'm just watching. Making some Southern grits instead of trading this morning. Nice. That sounds good. Doesn't SPY look really bearish on the daily and the 4 hour? After the yesterday's daily candle, yeah, it doesn't look good. New lows there. Just straight selling. Look at this, bro. This isn't the lowest we've been, right? We haven't taken the low yet. No, it's like what, 432, 433. So we got like $3 to go. That does not look good. Let's see. Nvidia got killed. Everything's getting killed, dude. Yeah, and remember, guys, those of you guys that are sitting on the outside, the only reason why we are public streaming this long today is because Powell. All the other days here, at 9:30, we're cutting the stream. We are going private with all of you guys that have taken that step forward, that have said, I want to take my trading seriously over on trade1348.com. But lucky for you guys, everybody gets their first month free. So make sure that you guys hop in there if you're interested in learning how to trade and take advantage of what the market has to offer by next week. Because we will be doing the pre-market lives, but then we're going right in with the community at market open. Did Powell say something? Yeah, it was Jackson Hole. If you don't like the IV, you can always play longer dated contracts and not get crushed. True. Private streams over 69 as well. Yep. Monday, Wednesday, Friday. Yep. All you monthly guys, we're doing those streams for you. But Tuesdays and Thursdays, I'm going to be with Gabe on the masterclass streams. So again, make sure that you guys are. Also, the pricing structure applies to monthly too. The monthly prices are going up. So if you guys want to lock in the low monthly price, you don't have much time either. How much a month after the free first month? 69 currently. It's going up though. With what you guys are about to get with the new educational app and everything like that, it's it's gonna be nuts. I'm so excited. Tuesday, you got 4 for 4 making use of GoldenEye. Nice. Up over 1,000 on your first day trading ES on your 50K challenge account. You're done. Small port up over 17%. Good shit, Holden. Yeah, dollar coming up. Oh, 104.375. Where's the high? It's around here, isn't it? It's like 104.50 or something. Or am I just lying? When's this? 22. It's this. It's this one. In May. When was it? March? When the fuck was the dollar this high? 105? Oh, in January. So it's 105.88. Okay. Snarky, no, we still have exclusive stuff for you guys in masterclass. Like GoldenEye staying in master. By all charts, we mean the ones that are out and like the for you guys in normal monthly. I'd love to see another 13 EMA test and then come back down to these lows because we are trending down. I don't really want to take this back up here because it's going to be really short lived, in my opinion. That's what I think. Let's see. Best investment I've made yet was becoming a lifetime master member. Sean, there you go, buddy. There you go. Yeah, again, that's make sure you guys are hopping into master before the end of the month. Ooh, it might be the end of the month. I don't know. So you're up 900 on your eval account since Wednesday. Yesterday only traded pre-market, so it's trucking along. There you go. Yeah, I mean, we're only down 0.2% or not down very much on the spot here. You get a retest and then come back down, you could really get some interesting movement down. Yeah, it's just chilling. I want to see this get a little action up. Not to trade it so that you can get the retest and play it along with the trend. US 5-year real yields climbed through 2.26% to the highest since 2008. Oh, Jesus. Japanese yen weakens to 146.58 per dollar. That's interesting. What was that, like 145 the other day? Let's see. Where is Tesla? That I don't hate on the 5-minute. I mean, you could risk the 200 EMA here, play it to those lows, 227.80. ATR already passed 100. On what, Tyler? On what? You YOLO'd your paper account on SPY puts? Why would you do that? Why would you do that? D-boy, what up, buddy? Oh, spot 100? Oh, 100%, you're saying. Yeah. Well, it's a different type of day. Remember, if you think about ATR, it's the average. Today is not an average day. So you can see outsized moves on days like today, like with Powell. Let's see. So like ATR, yeah, on normal days, I'd say, oh yeah, I'd watch for a reversal. Here, it still could happen, but at the same time, you got to think, well, it's not an average day. Way over 102, right? Like days leading up into it, like this is not an average period. Where like there's a little bit of data, nothing too crazy, leading up into Jackson Hole. Like, and again, these moves are gonna move the ATR around. Like the daily ATR will move. I wonder what the ATR would be if you only took these days. Probably $10. Or no. Never mind. Probably like 6 or 7. Probably 6 or 7. But all right, guys. It's 10:55 a.m. It's Friday. Not much going on. Again, you guys kind of know what to do here. Let's see if you get that little retest here, play along with the trend. If you can shift this trend like we've drawn out before, something like this where it goes down, up, down, breaks here, little retest, and then back up. Oops. That would be interesting, but from what it looks like right now, it looks like it's going to move instead of something like this, something like this, and then moving back to the downside. So we'll see what happens going into the rest of the day, team. It's a Friday again, especially if you've had great weeks. There's no real reason to do anything crazy on a Jackson Hole day like this. What I'm really looking for is just where this market really wants to settle in going into the next couple of trading days and weeks leading up into the next Fed meeting. So guys, I will see you a little bit later. Again, remember, we're going to be doing that pre-market live stream on Monday, but we're going to go private with all of you guys that have decided to put that step forward onto Trade 1348 with us, the best educational platform for trading in the world. And then those of you guys that still need to hop into masterclass, make sure that you guys are getting on that. The value of that is significantly increasing every single month, man. I mean, I'm going on Tuesdays and Thursdays. You got GoldenEye now. We have a lot of other awesome things coming from up to it. You definitely don't want to miss it. So reach out to Diana in Market Talk or go to your subscriptions area on platform. But I'll give you a hint. The end of the month is important. Don't miss it. Don't miss it, team. There's a couple of things that we're about to do going into next month. We're going to start doing that are going to be awesome that you're definitely not going to want to miss. So, team, I will see you guys later. Peace.